Hello, everyone. Welcome to today's Prime Talk, a discussion forum from ET Prime. My name is Sidhartha Shukla, and I'll be your host for this evening. A little bit about myself. I write about the capital market and cryptocurrencies for ET Prime. Today, we're here to talk about the rapidly evolving asset class, crypto assets. Bitcoin, the world's first cryptocurrency, itself is a difficult idea to wrap your head around. But in little over a decade, more than 10,000 crypto tokens have emerged. A new asset class has been born, and it can be difficult to keep pace with such a rapidly evolving space. In the blind chase to own the next best thing since Bitcoin, new entrants in the crypto space often forget to check before buying. So, how does one go about navigating a difficult to understand and volatile asset class? To discuss more about it, we have with us three well-known names in India's crypto ecosystem. To briefly introduce them, first we have Nitin Sharma. He is the founder of First Principle and blockchain investment network Incrypt and a partner at Antler Global. Then we have Edul Patel. He is the co-founder and CEO of Mudrex, a global algorithm-based crypto trading platform. And lastly, we have Joel John, who in his current role handles a portfolio of 30 startups at New York-based LedgerPrime, alongside leading investments into firms focused on the future of finance. Hello, Nitin, Edul, and Joel. Thank you for joining us today. Before we start the conversation, a few housekeeping points for everyone who has logged in. We have kept the final 15 minutes to answer questions we had received from our subscribers at the time of registration. Also, quick disclaimer, the views expressed by the panelists and hosts on various crypto assets should not be construed as a investment advice. So having said that, let's begin the discussion. My first question is for all three of our guests. In the last 1 decade, we have seen like a gush of crypto tokens being launched left, right, and center. Now we have more than 10,000 tokens available in the market, and not all of them are meant to be an alternate to money like Bitcoin. So how does one navigate such a broad space? Like, it'll be great if you can help us understand what are some of the categories in which different tokens fall under, and how should one look at them while creating a basket of tokens to invest in.
So I think I'll go ahead and start off.
Sure.
This is something that we've been working on very closely at Mudrex over the last 2 months or so. Essentially, what's happening is that there are tokens being built on top of the utility of the blockchain in different categories. Right? Currencies, there are smart contract layers, there are settlement layers and layer 2 solutions that are being built, and so on and so forth. So some of them have some value in terms of what improvements they do over the current system. And one thought process that we are trying to follow at Mudrex is try and categorize all of these tokens into different buckets and then create some indexes on top. So that's one way in which you can categorize these different tokens is what they are doing, what's their value, how are they growing, and where do they impact, and so on and so forth.
So I think just to add to what Edul said, the way to categorize a token typically depends on the age of the network. So something like Bitcoin at this point, you can say that it has almost established itself as a payments network, at least through the lens of what El Salvador or some of the other regions have been doing. You take something like Ethereum, there's an argument that it is a commodity which is used for very specific functions like on-chain compute and the like. So broadly, if you were to categorize it, you could say that there is payments, there's utilities, there are assets that have similarity to securities, and there are also what could be considered ownership stake in a network asset. So something like an Uber, which is a network, you could likely own a part of that network too. So these are the four categories of tokens that are emerging. I think in terms of characteristic behavior, a lot of them tend to have a timeline. So earlier on, they tend to have high volatility and therefore can be considered somewhat similar to a speculatory asset. As the user base grows, and I'll explain what that means, it tends to behave more like a foreign currency, like the volatility tends to behave similar to that. And as it establishes itself, it tends to behave more like a commodity. So it boils down to how old the asset is and the number of people that are using it at that point in time.
All right, sure. Nitin, what are your thoughts?
Yeah, I mean, I think that covers it well. Just to take a little bit of a historical view, and funnily in this space, history is just a few years. So the first classification that I saw was utility, security, and payment. And this was during the age of ICOs, if some of the folks in the audience might remember, in 2017. And really, every token was saying that they're not a security, they're utility. And 99% of them were claiming to be utility tokens, which really meant that they said the purpose of the token is to give some utility inside a network, right? As both Edul and Joel mentioned. And I think really what has happened is, I don't think the security token market has taken off as much as people thought. I think the regulations around what is considered a security and all still, obviously, we all know, are very unclear. It really vary across countries. So what has happened probably is just sub-classification of utility, right? Where I think some of the more interesting things right now, in areas like DeFi, et cetera, which I'm sure folks in the audience have seen these buzzwords at least, or maybe even gone deeper. They probably perform the function of governance. So I almost think of governance tokens as a sub-classification of utility tokens, where it's not just the idea that you get a share of the value created by the network, but also that you have some ability to participate in the governance of the system. So that I would call sort of a 1A, and a specific area which is really becoming more important. But yeah, from an investor's perspective, right, your question. See, I don't think for an average retail investor, it's possible to really figure out any of this out based on the user experience of exchanges or even reading it, right? So you really have to ask yourself, what is your goal here, right? Is it to basically get some exposure, in which case you should just take a simplified view, in my opinion. And then there are folks who are obviously part of the communities and going deeper into these projects. And there you can probably ask the tougher questions. Is this actually a utility token? How does the token increase in value? What is your token economics? How is what is the schedule defined? Is there going to be inflation? All of these questions. But I don't think that's for, maybe, unless you're really committing time to it, I don't think that's worth going into, because it's super hard to figure out.
That's interesting. Recently, we have seen that a lot of institutional interest in cryptocurrency, especially like Ethereum and Bitcoin, right? But in general, what role do you see crypto assets playing in one's portfolio, and what should be the approach towards sizing one's position to a crypto token? And if you have some perspective on how do these various crypto assets correlate with other asset classes?
Yeah, I mean, maybe I'll just comment on the first part, and I think Joel or Edul might have a more specific data-led perspective on the recent correlations, because it varies a lot. So I think what has become clear after a long time is that cooperation, if you think about some governments, all the way to some governments with El Salvador and some Latin American governments, to corporations and their balance sheets, the likes of MicroStrategy, which is a public company in the US, but also others in Square, etc., to financial markets and institutional funds, and of course, retail investors, right? All of these buckets, you are seeing, people compare the 2020-21 boom to 2017 or 16, 17. And at least from what I felt was that there was too much promise then. There was actually no data on adoption by either governments or balance sheets or corporations or financial institutions. Today, you have that to some degree. Sure, it's still, I think, largely, a lot of hype, but there is actual evidence that institutional investors, some of the largest funds, have all taken the view that you have to consider this as part of your basket. And the more timely reason for that is just as an inflation hedge, because of the historical quantitative easing all the way to post-COVID massive expansion of monetary policy, right? So countries are just printing money, and everyone from a retail investor to a government is asking what is the future of this and where will inflation go? And I think it's a very logical idea for folks who believe in Bitcoin, for example, to think of it as digital gold and to have some exposure. That exposure can vary. So I think it's become clear that's one. The second thing I believe that's become clear for folks who are more technology-led investors is that DeFi, or at least the Ethereum ecosystem in general, are here to stay. And that people have doubted this for a while, but things are actually getting stronger and stronger. And so maybe we'll go deeper into that later in the conversation. And outside of that, I believe everyone is still figuring it out. That's just my view. I mean, folks like Joel and funds and Edul, there are people who are going very deep into certain other areas. But I think largely for me, I think from an institution's perspective, Bitcoin and Ethereum have established some utility. And then there are a lot of interesting things around picks and shovels, right? What all will help create the infrastructure for this space. So there are lots of areas to invest in from an institution perspective, but I'll let the others comment on the correlation part.
Sure. Jewel, would you like to talk about the part about sizing one's position and how does it relate? Yeah.
Sure. So I think in the sizing bit, it really boils down to the nature of the firm and what their risk appetite is like, right? Like something like a micro strategy might go all in, whereas something that's more conservative in terms of how it thinks about risk would likely put less than about 1% to 2% of the fund size. And that's what we are actually seeing. We're seeing funds that handle, let's say, $500 billion in AUM, put about 1 to 2% into crypto, which is still not a large percentage of their AUM, but it's large enough that any volatility within digital assets actually creates meaningful returns for them at a fund level. When it comes to corporate treasuries, I think organizations are taking risk in two forms. One is through direct acquisition of crypto, which has been discussed about. But the other way that they do it is either through corporate venture capital or through in-house teams that build specific apps, right? So that's the other philosophy that they have. And in terms of things like is crypto an inflation hedge and correlation, I think the academic body of work that exists as of today, it says that it does not behave the same way gold does, in the sense that it can't be a traditional inflation hedge at a macro level just yet. So far, it's grown because it's an early stage network, and we see those returns coming in. But going to the future, there is no case to establish that it is an inflation hedge. It actually has quite strong correlation with the US equity markets. Okay. So if you do see substantial drawdowns in the S&P 500, we may see drawdowns in BTC too, because the way a lot of institutions see Bitcoin is as a risk-on asset. So if your portfolio is doing well in the public markets and you want to take on more risk, then crypto is what you would. So that's why in the last few weeks, as markets have been risk-off, you see a drawdown with Bitcoin itself, right? Okay. So to answer your question, how are funds sizing it? It's usually sub 10% if it's a large fund, or they invest into a third-party fund that does just pure crypto investing, like the one where I work at. In terms of inflation hedge, that theory is still playing out. We don't know whether it will play as an inflation hedge from here on. So far, it's played out well, but there is no body of work that says it's going to keep doing the same. And in terms of correlation, it's highly correlated to equity markets and slightly inversely correlated to gold so far. Yeah, that's how we've seen it.
Yeah. I think what's also becoming more and more apparent or fairly clear is that when people are starting to take crypto and make that a part of their overall portfolio diversification, the reason why they are wanting to add that is in cases of sudden movements, you see significant outside returns from the crypto side, because as Joel rightly mentioned, right, everything is still fairly correlated. Like crypto in most cases inside themselves are fairly correlated, and Bitcoin itself is fairly correlated with public equity markets. And there is just right now some negative trend or negative correlation emerging outside of crypto. So it's all still fairly in lines, but the returns are fairly outsized. So that's why it's that risk on asset. And that is why it makes sense to have at least some part of it as a part of your diversification bucket, so that you get those gains up.
Okay, all right. On the note, with regards to institutional investors, right, we are seeing this trend that a lot of institutions, public, private companies, now even countries like El Salvador and all, are buying into Bitcoin, right? I'll just quickly share my screen with some data, as our listeners can see. Over here, we have a chart which shows that the total holding by all these institutional players is as around 7% of the total Bitcoin in supply. Right now, we are seeing this shift from what we had, like a huge Bitcoin base which used to hold a lot of tokens with them, to more sophisticated institutions. Right. What kind of a impact will this shift or this diversification in the holdings, right, will have on the price going ahead?
So I'll just make, I think one thing that might be worth noting here is that if you expand this definition to include crypto funds or crypto investors, that number would be far larger, I'm sure.
Yeah.
In fact, somebody might look at it and say that, oh, it's only 7%. So the 93% or so is actually very, very decentralized and very spread out, right? That's not really the case. As I think it's been talked about quite a bit, that even, and this is only BTC, of course, it might be different for other assets, but clearly it's not as decentralized as one might think. And so I think if you expand it, because ETFs have to go through the regulatory hurdle, and there are only very, very few examples. But I think if you expand the definition, that number is, definitely in I'm sure something like 30-40% or more. I think what it means going forward is that these shares, I believe, will all increase as sort of more quote unquote smart money comes in. I think the ETF kind of product itself could really change the number, right? And that's why it's such a floodgate that's not been opened yet by most countries. So I think these numbers will definitely increase.
Sure. Edul, what's your thought on this?
Yeah, so I think if you go back and look at what's happened in the past, and actually let me give you some more flavor on this same topic about inflows. If we look at how things have moved over the last year, you can see that a lot of the money that's been coming in into crypto actually has been institutional, and that institutional inflow peaked in the last few months or so, and then is now steadily slowing out. So the one big difference in what was happening in, let's say, 2017, 2018 versus what happened this time and why we saw the rise was because of a lot of these other participants coming in and starting to take some kind of significant stake and some kind of significant holding into crypto. And as time progresses, what this has now started to do is that it has relatively stabilized and made crypto slightly more range bound. Because at all points in time, whenever it's trying to fall, there are lots of people waiting to buy in, and more of these folks coming in are coming in from the institutional side. And just like there is a strong support, there is also a resistance beyond it going up from a significantly high amount, right? So that because a lot of people are also waiting to make sure that it stabilizes. So that's why we are starting to see crypto becoming more and more range bound in the last few days itself. And I expect this range boundness will eventually lead to reduced volatility, which will help it in stabilizing and so on and so forth, but we are still fairly far away from that.
Sure. Joel, can you elaborate a little bit on the range right now? Like, for example, in 2017, we saw that from highs of 20,000 USD per BTC, it fell to $3,000, right? Now, do you think we have a higher bottom right now at this stage? We see that, despite the bearish sentiment in the market, Bitcoin hasn't fallen the way it used to back in the day.
So I think I won't give price ranges, but what I would say, based on past cycles, anytime you think that there is a prolonged sideways or bottom trend that's formed, it usually is the pain usually doesn't end there. So what historically happens in most charts is you have a drastic pull down. That's what we saw from 60 to 40, and then we saw again a pull down from 40 to 28, and now there is like this brief period of optimism where we're going back up to 35, right? It's great if we just bounce up from here, but usually when there is consensus that the worst is behind us, it usually means there is more pain. So for most retail investors, the way to play it is just do what is called dollar cost averaging in the traditional markets, right? You size your portfolio over a period of time instead of saying, this is where the bottom is, because the honest truth is nobody really knows. Sure, there is institutions that are looking to buy, but there is also likelihood of more sell pressure coming in. It could be miners that need capital to move from China to another part of the world. It could be hidden leverage that we don't know about and needs to be covered. It could be a global collaboration between governments to regulate crypto assets altogether, right? So to answer your question is, can there be more pain? There is likely going to be more pain, if anything, because of how optimistic the market still is. But the way to get around it is just to dollar cost averaging. That's what most investors would do.
Sure. Joel, on the point about how retail investors should go about navigating the space, right? What are the different approaches and products towards crypto investing, and the advantages associated with them? Because right now, the most preferred choice or the most easy way for anybody to get into the market is like by going to a crypto broker, right? And that's the most popular source, and people tend to buy specific tokens, and in very few cases there's enough literature or knowledge about them, right? So what are the alternatives, alternatives and some product innovations which can serve as a proxy, right, for getting exposure into crypto?
So I think I handle early stage investments for a number of startups in the space. So thematically, I'm seeing a couple innovations from the traditional world porting over to digital assets. So one of them is, like I said, the dollar cost averaging product. Most exchanges would likely at some point allow you to just wire 10,000 rupees, and they basically buy 1,000 rupees over 10 buckets. 10 transaction buckets over a set period of time. So that is likely something that's going to come to the market. We are seeing in indexes or indices focused on certain themes. So if you're looking to buy crypto that's based on games or on NFTs as a theme, you could likely just put 1,000 rupees and then it splits across multiple assets so that your exposure is to multiple assets and not just a single project. So that is also becoming common. I think the other bits that we're seeing in regions like Singapore, Switzerland, and the like is that banks themselves are allowing people to buy crypto,
Okay.
but it's usually only Bitcoin and ETH. It's not the other assets, right? So like it's not going to be random meme coins that banks allow purchasing. But what they're trying to do is make sure that the customer stays within the infrastructure of the bank and does not move wealth outside the bank. So if I'm buying crypto within the bank's infrastructure and I'm selling it, then my cash basically stays with them, right? So that's the angle that's happening there. I think if you want to go a little more further, what I'm seeing in the state side is there are personalized crypto plans that people are suggesting. So if you're in your early 20s, your risk appetite is likely higher, and you likely want access to something with higher volatility. So people get recommended crypto more. And within that, people create custom plans for the person in question. Again, to tie it back to what you had asked earlier, I don't think within a personal portfolio more than 15 to 20% of your assets being in crypto would make sense for unless you're working full time in crypto.
All right, sure.
If you're working full time in crypto and if you got 20% of your portfolio in crypto, that's a double risk.
Yeah, that's a double risk. Yeah.
Yeah, I would be lower than 15% for most people.
Yeah.
But,
yeah.
Very
But yeah, coming to Joel's point, I think what we are seeing now is that broadly in the equities market, there are 2 or 3 different kinds of products that exist where people can invest in, right?
Yeah.
There are effectively the debt fund kind of products where you can just put in money, they're low risk, they give you like a 7 to 8% returns and kind of sort of linear returns as such. Then there are the ETFs or indexes products where you get market returns. They are passively managed. There is no active management on top. Then there are active managed funds, which are all the mutual funds of the world and so on.
Yeah.
If you talk about investing in equities, people essentially say that they want to invest in one of these 3 products, right? I mean, if you talk about investing in crypto, people go out and buy Bitcoin, which is the effective of buying, let's say, TCS or Reliance stock in one, right? Which is not at all what investing is thought of in like the traditional sense. And what is starting to change now is that as time is progressing and as more and more retail participation is happening into crypto, people have started to realize is that the retail audience typically requires simpler products where they can easily invest in over the longer run. And as a result of that, similar to these products are being created in crypto. So like, for example, indexes are being built. There are managers who you can follow on crypto by, clicking one button and allocating some funds to them. And then on top of that, there are even products that are being built in the debt fund market. This is the effective of yield farming or what's happening in DeFi, where you deposit your money, there is close to zero risk, you get steady, constant and consistent returns.
Okay.
I think sorry to cut you off, Edul, just
no worries.
I think one of the cool things that's happening, focus on the retail markets, is a lot of projects are trying to give away crypto if a user is able to bring value to the network, right? So Airbnb was trying to experiment with giving away equity to their best listings. But we're seeing that didn't play out because of restrictions from the SEC. But if you have a token, basically, and you're running a game, you could likely reward your most active gamer in tokens and give them partial ownership of the network. So those kind of innovative models are also coming. So I think the one thing I would wish more retail folks knew is that investing is not the only way to build exposure to crypto, right? Like if you're an active participant in some of these networks, you likely get crypto for doing that.
Yeah.
Sure. Yeah, Edul, you would like to continue?
No, I think I was only trying to conclude that with all of this tokens that are being given away, how do you convert it and invest it in the right ways is what is being built out on the DeFi side, where you get those steady gains and steady returns. Okay. So that's the only part that I wanted to conclude.
Makes sense. And let's talk a little bit specifically about tokens as well, right? We cannot use our traditional metrics to value a network technologies like Bitcoin or Ethereum, right? So while people are still trying to figure out how to value a network or the value of a token, right? What are some of the metrics that one can look at from a technology point of view? Or I think it's better to look at what are some of the red flags one should look at in a crypto project, right? Which can help investors not burn their money. Yeah.
Yeah, I think the red flags are way more important than anything else, because we're still in the very early stages of crypto being developed. So just to and we've seen just so many red flags in the past, and that's the problematic part, right? Like the reason why retail needs to be cautious of crypto is because there are just so many people providing you outsized returns that you typically tend to fall for it.
Yeah.
So I think 3-4 red flags that I typically look out for before investing or even looking at certain tokens or projects is, one is of course the size and scale and longevity. So how big is the community, how many number of people are using it, how long it has survived, and so on and so forth, right? That's one major kind of sort of checklist that I go through before picking and selecting or even advising tokens. The second thing that I also try and look at when I'm trying to go into detail is try and see what's the actual problem that it's trying to solve, and does the core technology of blockchain have any utilitarian value of doing it? Like, or some people are trying to build it on top of blockchain without there being a need for it. Like, it's like a tool that needs to be used for a purpose, right? There's no purpose. Why are you building on top of it?
Yeah.
Second thing that I try and look at. Third thing that I also try and look at typically is to try and see if the people who are building are known and have been trying to build projects in the past. Is there some background history and so on and so forth with these folks who are doing things? And those are some of the things that I look at when it's early stage. But by far all of this requires a lot of research. So for someone who's not wanting to do research, by default, don't go into anything that's below, the top 3 or the top 10.
Yeah.
Like Edul, I have a follow-up question for you, because I know that Mudrex is building indices and all, right? So when you're looking at a number of tokens to be a part of an index, right? Like in equities, people look at a lot of things with regards to liquidity, market cap, and so on and so forth, right? What are some of the metrics that you look at while creating an index?
That's great. So at Mudrex, we're trying to build a product that essentially lets users invest in a basket of tokens. And as Joel, and this product goes live in like a week or so from now. And as Joel suggested, the idea is to categorize it into different ways or different themes as such. So there are one is how do you select the universe, and the universe is thematic. So effectively, if you want to invest in NFTs, why invest in one NFT company? Invest in like a NFT index of the top 10 NFT companies.
Okay.
If you want to invest in a currency, why invest in just, let's say, Litecoin? Invest in the top 10 currencies. Or if you're just long crypto market, why invest in just BTC? Invest in the top 10 cryptos, and we take the overhead of figuring out what should be there, how should they be rebalanced, and so on and so forth on a monthly basis. Right? Apart from just looking at the universe, I think some of the things that are important to us that we value while we are trying to figure out are some of these points, whether it has enough liquidity or not in the markets, whether the prices have been relatively stable or not, whether there are legit teams working on it or not, and is there longevity to the project. The only outlier to this question is actually building a basket on a theme of newness. So
Okay.
a lot of times people just want to invest in what is the latest tokens out there. So that's another kind of sort of a basket that we are trying to create.
All right, sure. Joel, what are some of the red flags that you look at? Yeah.
So I think in addition to the red flags, there's also likely macro components that's at play, right? I think the number one way most retail folks lose money is through FOMO. So let's say a celebrity is shilling it, or your Twitter feed or your Instagram feed is filled with mentions of this coin. It's time to just close your computer and go for a walk, because the vast majority of people that I know lose money doing that. The second is I would think that if there is too much of a concept on Unis, or it sounds like it's something that is technologically impossible, it's best to just stay away from those. So what typically tends to happen is this could be known founders without any intent of malice, just building deeply academic projects on top of a crypto network, and their projects are likely not going to be functional for the next 3 to 5 years, and within which period the token could basically become useless. So a lot of retail users, even when they do the hard work of research, end up buying these assets. So it's impossible. It's very important to rate it on that metric. I think the third obvious red flag that stands out is this a memetic asset, in the sense that when people were buying into Dogecoin, SHIB token, and the rest, there were copycats that were trying to ride on the same wave. If you're investing into a copycat or a narrative that's been copied, you're likely going to be losing money. So that's a third bit. I think there's also bits from the traditional world that you can actually use here. If the founder or the team is not able to communicate what they do in simple enough terms, maybe don't invest in it just yet, right? So I think what Edul mentioned with the term longevity is that the longer project is around, the lower the odds that it is a scam. So the vast majority of people in India that may have lost money in crypto likely lost it because they bought it trying to front run everybody else, right? Like they want to be first money in on that project. Like I've seen founders, they would be like, hey, I'm launching this new project, and you would see like 10 random guys writing, hey, how can I be seed stage investor? Because it's just become such a culturally common thing for people to put first money in. So I think avoid that. I think personally for me, the biggest red flag is if I feel the team is intentionally not trying to focus on what moves the needle. So if it's a DeFi project, and if they are not focused on making it more customer centric or making it more secure, but rather focus more on marketing it or listing it on more exchanges so that more retail people can buy in, then their priorities are likely on the wrong side. I'm not saying that should not happen. There's likely a balance that most teams need to strike. But yeah, that's also one of the red flags that sticks out for me.
Sure. Let's for the sake of simplicity, let's use a few examples that we've seen in this recent bull run as well, with regards to, like you mentioned, Dogecoin, and one that comes to my mind is Ethereum Classic as well, right? I'll just quickly share one slide which with regards to Ethereum Classic, which I had made to give some context on what we are talking about. Just give me a second. Yeah, so over here we have a chart of the hash rate of Ethereum versus Ethereum Classic, right? Now, this is from my personal experience from some of the reporting and conversations I've had with new retail investors in the market. I had asked them why did you invest in Ethereum Classic? And it's funny that many came up with the answer key. We thought that this is we are getting Ethereum at a huge discount, right? And nobody was cognizant of the fact that Ethereum and Ethereum Classic had poked a couple of years back, and with Ethereum Classic we have seen many double spend attacks directly on the blockchain as latest as August 2020, right? And we can just see the difference with regards to the mean hash rate as well. Like the red line, which represents Ethereum, it'll be this much difficult for anybody to execute a double spend attack on this. Whereas the green line, which is for Ethereum Classic, it shows that how easy it can be for some parties to compromise the blockchain, right? This is one example. Then we had Doji as well. We what Joel was mentioning about celebrities, and we saw how Elon Musk was also pumping Doji time and again, right? So can we talk about some of the metrics and things around these two specific tokens, which can help people understand see, like, what red flags one can look at?
So I think I think Edul and Nitin would have very rational views on this. I feel, at least in the just so that there's context on ETC Classic. I think generally when an asset shoots up like that in price, it could also be because there is a supply side squeeze, in the sense that on the short run there isn't enough ETC Classic on exchanges being traded, and price just keeps going higher and higher, right? Of course, eventually someone that holds enough of that asset just comes and sells, and that's what happened with Dogecoin. I had done a little bit of analysis on this. Every time price goes up substantially, somebody that's been holding that asset for a year or so basically just comes in and sells. Everybody's got a price point at which they sell. So for retail investors, I think the best thing likely to do is don't buy things because it's being spoken about on social media. Now, if you want to use metrics, like you said, there are certain platforms like Nansen.ai, or there is sentiment.net. It's basically called on-chain analysis, where you look at what the investor behavior is at a network level. So it basically shows things like, what's the last price that the vast majority of investors move their assets at, or it would show you the average amount of time an asset has stayed dormant in a wallet, because that will basically explain whether people are speculating or whether long-term investors is selling. So there are a number of platforms that actually give this data. And I think both exchanges and users need to be more clear in terms of using these on-chain metrics in terms of making their investment decisions, instead of just running around on basis of what's on social media, because that can be really programmed to benefit one.
Sure. Edul?
Yeah, so to be honest, I think with what happened with Doge and ETH was that it was less of people actually wanting to invest in it, and a lot of people just wanting to be a part of the fun wave that was going on. Right? So I know, or I have a whole bunch of friends who didn't invest from the intention of making $1 bazillion out of it, but just wanted to be a part of it and be a part of the cultural phenomena that was going on. Right? So when the important thing was, in that case, they were aware that they were doing it because they wanted to be a part of this, right? And not actually to make meaningful gains and returns out of it. So a lot of times people are actually investing in these tokens like Doge, etc., but to be a part of that, to be a part of the conversations that are going on with their friends and so on and so forth. As long as you're doing it with that objective or with that purpose in mind and doing it for fun, I think it's all fair play. But don't put
money. Look, I think just to take a step back, I think Joel was going through a number of products that are coming up, and if you look, I mean, a lot of this innovation is happening in countries like the US, and we've also had things like Grayscale, etc., which are terrible products in terms of a cost basis, but there are ways for people to get exposure. I think when it comes to India, because unless you're really into DeFi, etc., for an investor to think about how to invest, I think you just have to ask yourself, be very clear: are you an investor, are you a speculator, or are you a specialist? And not confuse them, because this space has a lot of specialization. I think 3 things that one has to remember about this space: there is a lot of specialization now, way more than the average person can get a grasp of. Second, there is a lot of manipulation, which I absolutely believe is still the case with even the largest assets. So, the broader retail market will, as always is the case with every asset class, be left with the bag at some point. And of course, that's, when the prices are going up, everyone feels like a genius, but it's not to forget that this is still a fairly manipulated asset class. And the third thing is that it's all about narratives and as was mentioned earlier, sort of mimetic storytelling, etc. So, one, I think, needs to just figure out where you are on that spectrum of I'm just an explorer to, and I think the nice thing that I think and I think it's already happening, right? Actually, there are 4 things. Like, there are people who just want exposure. I would say that, and I think there will be broad agreement that those folks should not really bother beyond Bitcoin or Ethereum at max. And they should, first of all, none of this is investment advice. They should still do some research. They should still at least understand the idea of Bitcoin or the idea of Ethereum. But at least those 2 are established platforms / blockchain / ecosystems. I don't feel I can say that about anything else, because if people are taking a 5 or 10 year view, I'm not sure I would pick a third one. Then there are people who I would call explorers, right? Which is really the best thing that's happening right now, is that a lot of young people are diving in and being part of these communities. And I think there, if you have to go serious and go seriously into it, then some of the red flags and some of the metrics and questions have been covered. But you really have to invest time. And then there are speculators. And I think it is okay to speculate if you are clear that you are a speculator. And what I worry about is that a lot of people think that they're investing, but they should just be speculating, which means that the amount you're speculating with should be much smaller. And you should remember that 99% of these things may fail. And this was certainly true with ICOs. I think at that point, just integrity and scams were a big reason. And I think Joel alluded to this earlier, right? At this point, it may not be malintent, but it might still be risky, because just because you have a Telegram community doesn't mean anything eventually, right? These are all narratives that people are building up. Everything is just a narrative. And then there are specialists, where I think there it's certainly becoming like a more, an actual asset class. So I just think that people should be very clear about, their goals.
Sure. There are many people in the Q&A section asking, for the links which Joel had mentioned. So just for those listeners, don't worry, I'll get those links and I'll share them on Twitter as well as on our YouTube page. Yeah. So Nitin, on that note, like you said that there are still many ways how things are being manipulated, right? And there's still many bad actors out there. So, but right now in this bull run, we have seen like a rush with exchanges. They want to list as many tokens as fast as possible, right? So in that context, right, what are some of the things which exchanges can do more to safeguard investor interest, right? Like for example, Zerodha in the equity space, they've introduced something called as a nudge feature, right, on the platform. So what are some of the ways that exchanges can do more to?
So I think we can't expect exchanges to solve this problem. We can hope that they will solve this problem. I think there are 2 or 3 reasons why you can't expect the exchange to sort of be overly careful here. One, because they have to claim to be a neutral platform. And so they and this is exactly what Coinbase would say yesterday when they added some assets and people questioned. So even the largest player in the world, the most regulated player, has to maintain the stance that, look, we just are a marketplace. We are a platform, neutral. The second is that, exchange incentives are not aligned for a lot of this to happen, right? I think the exchanges are actually, when do exchanges make more money? When there is actually a proliferation of things to invest in, and there's sort of that spread, and then there is sort of liquidity on both sides being different, and they can make better economics, right? If you only had one asset, then the exchange would not need to exist. So by definition, exchanges want to have more and more assets. And third, I think, look, they're also just growth mode right now, right? So they're just also expanding the market in India. So the more communities they connect with their ecosystem, the better for them. So it's in their interest that even if a token isn't actually the highest quality, if it has a community, they will want to have those people be trading that token, on their exchange, for example, right? So for all these reasons, I don't think exchanges will solve this problem. I think they can try to self-regulate. Eventually, these things, that's why regulation comes in at some point, right? If it's not, I mean, even in history, if you look at other asset classes, that's why markets have to be regulated, because these market failures will happen otherwise. So I think the users just have to be careful and just keep doing more research. And exchange, I'm not picking on any exchange in India, but they're all incentivized differently. So because an exchange is positioning something shouldn't necessarily give it more credibility.
Makes sense. Joel, Edul, any thoughts on this?
I think what do you say? Just to add context here, right? Whatever is happening in crypto is actually, it's just a replication of what used to happen in the India traditional equity markets in the 90s. And anytime you have a new market, there is certain behavior that emerges, unless until the investor is well educated on as to what's happening. The downside is rather sadly, and this is not talked enough, that investor education bit can be quite costly, and it even ends up in at least few sites in the middle of the bear market, right? So while I totally agree with Nitin's idea that neutrality is the stance that exchanges take. I think we should likely be more sensitive that investing is not always fun and games. Now, I think exchanges have already been doing an incredible amount of work. I don't think that's been talked about enough either. Uh, these days, if you have to open a derivatives account on Binance or FTX or some of these platforms, they make you go through a fairly basic quiz that asks you some of these questions. If you do get liquidated again and again, like you said, the nudge feature from Zerodha,
Yeah.
it does exist on certain crypto exchanges. And the last bit I wanted to mention is the problem is not just with crypto or what do you say, equity investing alone. It's also the fact that financial education is not really rampant across the world. And it actually affects people in developing economies even more because people are more desperate for economic opportunities. So, scams like Ponzi schemes and they take off more in regions like India, Africa, and the rest versus a region with high amount of financial literacy. So that's likely one of the problems that needs to be addressed. It's just not crypto as a standalone. Yeah, maybe crypto does make it easier because you can move money faster. All of that, I buy that argument, but it still has this broader issue around it.
So,
Yeah.
from the perspective of the exchanges, actually, what happens is more often than not, users are asking for these fringe tokens to be listed.
Okay.
And it's not only the exchange wanting to do it. And that alludes to the point that Nitin was saying, that exchanges need to be this neutral platform where they need to at the end of the day listen to the users to be able to list it, right? But the core problem is that there is this lack of general information around it and general education around it. And in a lot of cases, exchanges or other platforms or platforms like Mudrex, we're trying to build out these educational and informational layers so that people can take decisions better. Or in cases where you can't take decisions better, go to someone else who can.
Yeah. So my last question for our session, then I'll take some of the questions which our subscribers had sent. Nitin, this year has been a record for VC investments in the crypto space, right? Till now, we have seen more than, I think, $17 billion coming in so far globally, but not a lot has come to India, right? So how are the regulations like holding us back? What's at stake from not creating a safe space for crypto startups to grow?
Yeah, I think, look, we've done I think Joel, Edul, and others, the community, and there of course are many efforts that have been going on. We've done a lot of this in terms of understanding the policy side and trying to create that bridge. I think that from a VC perspective, that still is one of the probably the number one challenge for an institutional VC fund in India, for example, to take bigger bets. The second, I think, is just a learning curve. This is a very steep learning curve, and I think third, is that if you're investing in crypto or the space, you can make equity investments and think of just investing in the equity of something that's creating infrastructure, or like a marketplace, like an exchange. But then many more interesting things have to do with digital assets or tokens. And VC funds or even most institutional investors are not geared up to handle questions around custody, taxation, regulation, insurance, etc., which come with holding digital assets, because it's a very new concept, right? Funds are not allowed to sometimes in LP agreements, and even if they are allowed to, it's not easy as a learning curve. So I think that regulation is the major roadblock for VC investment. I think there are a few other reasons. I think in terms of what is happening, right? So there has been more money coming in, especially at sort of mid-stage rounds, but largely exchanges. So where is money coming in into Indian startups? Mainly two channels. One is the 3 or 4 exchanges we have. I think a couple of them have done sizable rounds. I know a couple more will be doing very sizable rounds soon. So there is certainly more enthusiasm from global VCs for India as a market than Indian VCs. Yeah. It's certainly a lost opportunity. And the second stream of cash that is coming in, or rather digital assets that are coming in, is because a lot of interesting Indian projects have they're crypto native, so they don't actually go to VCs. They don't need to go to VCs, and I think that's the more interesting wave to watch. Is that some crypto startups or blockchain startups will want to go the traditional route, go and work with a VC for 6 months, a year, 2 years, and then many others will start from day one by skipping the traditional VC cycle and just going directly to some DeFi fund or crypto native investors, and literally right now even doing it without even doing it pseudo anonymously, right? So what is happening in a lot of cases is that folks are submitting their proposals and getting approved within a day or two for 50,000, 100,000, 200,000. So it's a lost opportunity, I think, from India's perspective for sure, and that's a longer debate in itself. This is the new internet getting built. This is web. For me personally, I'm not a trader. For me personally, the thing that's always excited me is a new internet and a new financial system. Now, I don't think it takes a genius to understand, how big that could be in 10 years or 20 years. And the question is, from our perspective, does India want to be a laggard again, just like we were in AI and so many other things? Or do you actually have your talent, your investors, your retail market be part of this revolution, right? So certainly wish that it wasn't, that this whole last couple of years had been clearer on the regulatory front. But, I think at least now it's somewhere in the middle where it's not really a ban, but, there is enough activity happening even with the regulations not being clear.
All right, sure. Edul, Joel, your thoughts?
I think just to add a little more color to what Nitin was mentioning, right? The size of investments in India has actually substantially scaled, but that's also because the size of the average crypto fund itself has grown 10, 20x. So someone that had 5 million to deploy in the previous cycle now has to put in at least 50 million to actually create meaningful returns, right? So, but that said, we have enough proof to show that capital markets in India has exploded in the last year. Like there was this Bloomberg report yesterday saying that $40 billion has gone into crypto supposedly. The thing is, has India's crypto scene really evolved to really accommodate that? I would think there's still a lot of work to be done, and that is really being held back by regulation, right? Like the bits that Nitin mentioned, for someone that's really comfortable with crypto, they can go ahead and raise money. But there's a lot of talent that's at the periphery that's not coming in, because as you can see in the questions here, right? Like the big question is, would the government come and seize my assets if I build on crypto today? The thing is, when I was growing up, I used to see panels on why wasn't Google or Facebook built in India? Why was it in Silicon Valley? The thing is, the current mentality is likely going to be leaving us wondering why didn't the next Coinbase come out of India? And it's not because we don't have talent; it's because we haven't created the environment. And I think the more riskier bit is that crypto moves at such a fast pace that unless the regulator really builds in-house capability or engages with people that are in it constantly, it's going to be unlikely that we can actually bring out regulations that make sense in a meaningful time scale. Like it wouldn't matter if 10 years from now there is clarity on Bitcoin, because that should have sailed, like Nitin was mentioning.
Yeah.
So some of these things just stand out. I would think a lot of the people in the 1980s, when before India's SaaS and services boom happened, 1980s, early 90s, they had to actually take a substantial amount of risk in building those businesses, but then the government became pro-business, and that basically helped create cities like Bangalore and Hyderabad, for instance, right? The same opportunity lies within crypto today, but it would require political will, it would require government expertise. Yeah.
So the cycles are so short, right? Like the frontier tech, you cannot regulate it like you would regulate water infrastructure, which can take 10 years. But in frontier tech, if you miss the first 2 or 3 years, right, it's an exponential curve. So you can really get left behind.
Yeah.
Very good.
Yeah, so I am slightly more optimistic on that front. And the reason why I'm slightly more optimistic is because crypto is a global market and not a market only for Indians. So what we are today seeing, and I speak to a whole bunch of people around, is that there are a lot of people who are building crypto products focused on a global audience, and instead of not an audience that's focused targeted only to India, right? So that's the other thing that we are starting to see more and more and more. And of course, clarity of regulations, clarity of holding, whether we can do things or not, how do we tax it, how do we define gains, all of that will only help and accelerate this process.
So Edul, just to add to something to think there, right? Like just think about what percentage of Flipkart's sale came back to India as wealth, and it's likely going to be playing the same with crypto, right? It's not sure you can build in India for a global audience, but if that revenue is not captured by the government, I would still think we would lose.
Yeah, it's a lost opportunity for sure.
Guys, I think we have very little time in our hands left now, but I would like to take just a few quick questions from our subscribers. So there was this one interesting question by Ayushi Sarna. The subscribers has asked, what is the role of cryptocurrency towards improving public policy in developing countries like India? Rather than cryptocurrency, I think let's focus it along with public blockchains as well. Like, how that can improve public policy in developing countries like India. Can I think?
You throw the toughest one. No, so it's an interesting question, which will take about several years to play out. So the example that comes to my mind first is the Switzerland and e-voting, right? I actually had taken a delegation of Indian reps to Switzerland 2 years ago to study blockchain ecosystems and all. And their public policy decisions were now also being sort of voted on using a blockchain, right? So that's actually an example of just creating more trust in the system. Those are very participative democracies. They vote on a lot of things. They don't have elections once in 5 years. They have 5 elections every year on every type of thing. And by using e-voting and blockchain, they were just putting more trust in the system. I think there is the promise that exists of a lot of decentralized mechanisms working better in general than centralized mechanisms, whether it's land records or microgrids around energy, etc. So the promise is there that when governments allow these things to be decentralized and more of public goods in a true sense, then your overall policies would be better and the overall economy would grow. Is there enough evidence today in terms of public blockchains actually solving this? I personally don't think it's there yet, right? And there are lots of things related to usability and scalability of these systems, which will take some time to play out. But it's so disruptive that you have to keep experimenting. Right now, the problem is it's on the other side of the debate where policymakers are actually scared of these things. So the narrative is actually not that these systems can improve policy, but that these things are very threatening to governments and the control that they like to have. So yeah, I think it'll take some time.
Sure. There was one very interesting question by Ajit Menon. He's asking, is cryptocurrency a threat to central bank digital currencies or vice versa? Yeah, so who would like to take that one? Joel?
Yeah, sure. I think the way to think about it is there is a spectrum of decentralization. Something like Bitcoin is likely on the extreme end of it. And then you have something like your fiat notes, like the Indian rupee that we held in 2016 on the other side, right? A CBDC comes somewhere in the middle where you can claim that you have attributes of both public blockchain and the government having control on it. Will it be a public threat? I don't think so. I think both require completely different sets of users, right? Someone that's using Bitcoin likely wants the amount of decentralization and immutability that it has. Someone that's using a CBDC needs something like a low cost remittance or speed of transaction. So I think the two can coexist. It's somewhat similar to how you have a YouTube, a Spotify, a SoundCloud, right? Like they all serve different services. Now, I think what has happened though is in regions like China, as their CBDC initiatives took off, they did clamp down on public blockchains. And I think that can actually play out in a number of other countries too, because the regulator thinks that the alternative is not something that's good for them. The other at a more macro level is that the IMF has pushed for CBDC implementation in member nations. And that would also mean, it could mean stricter crypto regulations. So yeah, that's the way it plays out, but I don't see it being a risk.
Sure. Right. Edul, I would like you to take this question. It's from Manshu Chauhan. Does Ethereum has a future use case?
Does Ethereum have a future use case?
Yeah. I remember, like, some time back, I had jokingly said to you that, Ethereum had promised to become the world's supercomputer and it delivered us CryptoKitties, right? And in hindsight, it seems a bit foolish to me as well. But now, like, what's your take on this?
So I think today, if there is one crypto asset that has a future use case, then it is Ethereum. There is just a whole world being built on top of Ethereum right now. And more of it is being built around how do we transfer value and not only information and so on and so forth. So the question should not be, does Ethereum have a future use case? The question should be, what cannot be built on Ethereum?
All right.
And we are seeing more and more of this happen as things are becoming faster, things are becoming cheaper. There are various integrations and products being built on top. A few years ago, maybe there was this CryptoKitties, right? But today, a lot of products are being built. on crypto on Ethereum that are primarily simulating financial services, then entertainment, and also information exchange.
Sure. Like I would just like to add on to this question. If somebody has to look at a good use case of a product that's built on top of Ethereum, or what project one can look at? If you
So I
get
think,
a few names, yeah, Joe.
sorry, I just wanted to say that there is an alternative financial world being built on Ethereum today, and you have everything from remittance, lending, borrowing, exchanges, all of this being built in somewhat relatively decentralized fashion on a completely new stack. So if you want to see some of these projects, it's Compound. There is a project called Aave that you can actually go out and check. What they do is they have replicated what is gold-based lending in a global decentralized market. So people go and put Ethereum there and they get $1 loan, and it all happens instantaneously without someone actually having to do that process. And for a sense of scale, Aave processed about $750 million worth of loans in a single day in May. And that's roughly, you could say that these projects are reaching the scale of a Muthoot Finance in India, right? And the same valuations are also applicable there. So if you want to learn what's happening on ETH, the first thing you should actually check is the financial applications that are there. Don't go buy ETH, don't buy money, just go see what these applications do. Like that's what I'm saying. The second is, if you're a creative, there is avenues for you to check essays. So there is this platform called Mirror, which allows people like, let's say Sid writes a deep story on the blockchain ecosystem in India. He can actually post it there and get it crowdfunded, or someone can actually give him ETH for writing that piece. So there is, new business models that are coming around that. If you're an artist, you should definitely check out the NFT ecosystem. What that means is, instead of selling art just to people around you, now we can actually have a global marketplace for your art. And people spend thousands of dollars on these things. Or actually, so that's the creator ecosystem. And then there is the gaming ecosystem. If you just want to go play games, there are things like Axie Infinity that you can actually go and play, where you don't even need to actually spend money to start playing these games. And you can actually get used to how people are thinking about blockchains and on-chain assets and the like without spending money. So my first advice is, don't spend money, don't buy ETH, just go see these applications and see what they do and how they differ from the alternatives that exist today. Yeah,
sure, makes sense. Guys, this very interesting question. I think it will be very important for any new entrant in the market. So Shubham Jain has asked how to invest in cryptos while complying with the law of land. So what are some of the checklists one can look at?
so I think that is legal advice, and I don't think anybody should answer that. Yeah, unless PRCA is. Yeah.
Any thoughts from Nitin or Edul? Like, so what some some of the checks or balances, or what is something one should avoid while trying to get into crypto?
So I think I'll just answer that. I think first thing is, if you're using a P2P exchange like with Xerex, make sure you know who your counterparty is. Check their reputation, because usage of hacked bank accounts, Paytms, and all are quite common. So check their previous transactions, just like you do with Amazon, right? If that's possible. Second is maintain records of when you purchased the asset and when you sold the asset, because usually when you file your taxes, that is needed. You need the amount, just like how you buy gold or like. The third is, make sure you don't buy junk assets, because there is always that risk in terms of buying a random coin that goes to zero. And in the context of India, make sure whenever you do your purchases, you do it only through the large exchanges, because there's always a counterparty risk. So a CoinDCX or a Xerex is relatively safer. There is no saying that it is 100% safe. And try and do it through your bank account as much as possible, because in case you want to show trails, there is that.
Sure.
Yeah.
That's quite helpful. Yeah.
That actually sums up most of it that I was going to talk about. Definitely do not go out to some random website and send someone money in the hopes of getting crypto back.
Sure. Like I said to all our listeners, I will get the links from Joel that he had mentioned, and I will share them across platforms. So before we wrap up, can we have a few closing comments from our panelists? Yeah, Nitin, would you like to go first?
Oh, no, I think, look, at the highest level, I would say, this is a new internet and the new financial system, right? So if you are someone who is, especially, if you're taking that view, then this will be far more meaningful for you than thinking of just another speculative trade, and that will motivate you to do things like learn, try these products, which is really the most important part. And look, there is a learning curve, and it's not, it's become a lot better in the last 3-4 years, but it's still, there is a hesitation that comes, right? A lot of people start their crypto journey and then they get confused and then they drop out. But if you're committed to, if you start to believe this is a new internet which might evolve over 10 years, 20 years, and you want to be part of it, then I think you should take it very seriously, and differently than what I think happens a lot, which is people just think of it as a lottery ticket. So I think that's one. And second, I would say, just be very clear about your goals, as I already mentioned. Don't take more risk than you're prepared for. I would say that most people probably should not go beyond 5% or so of their portfolio. That's the broad audience. Of course, if people are what I was calling exploring and specializing, then that could be much higher. And just I think try to move the needle on the overall conversation in the country, right? This is a big opportunity for India, and do your part to sort of further that conversation.
Sure. Edul?
Yes, I think definitely do research, discuss, debate before you make a choice of investing anywhere. Be careful and try and make sure that you know what you're doing. Even if you don't know it, then please do go back and read up and only go through trusted sources. And lastly, just never invest more than any amount that you're willing to lose.
Yeah, and I was
can go to zero.
And I was just going to say that one proxy for, is to, and again, I'm biased because I'm associated with Mudrex, but like examples like Mudrex are actually good platforms for you to get that exposure by trusting people who are specialists and really not sort of doing all this work and then finding out you got robbed.
Yeah, sure. Joel?
I think one thing I would say is crypto has something for literally everyone. So in 2013, 2016, it was a much more smaller niche community. These days, I meet 20-year-olds from Rajasthan all the way to like 40, 80 or 5G engineers in crypto. And what do you say? To add to what Nitin was saying, don't just use them. Actually, all of these products have communities and they are all built on open source ethos. So you can actually join the community, break the product, criticize it, just write to the founder and you'll actually hear back from them. And I think that shift of being just a user or a consumer to actually being a proactive participant on the network or product is really where all the wealth generation within crypto lies today. And I think the reason why a lot of people lose money in crypto is because they think I'm on WazirX or CoinDCX and I bought these 5 coins, I'm going to make money. No, I feel being proactive participants is how you would make money. And I feel more people should do it because now the market can absorb all the different lens that different people have about, the new internet, right? Like in 2013 or 2014, that the market was just not there. So I would think, don't think it's just about finance or don't think that it's just about investing because everybody's got something for them in crypto. Just get involved. That's how I would think about it.
Sure. Those are nice thoughts to close the discussion for the day. Thank you, Nitin, Joel, and Edul. It was a pleasure having this chat with you. I would also like to thank everyone for taking all the time to be here. I hope you all are healthy and safe. Also, this video will be on our ET Prime YouTube channel, and please stay tuned for more such talks in the future.